Simplicity Master Guide 2.0, and let's actually dig straight into it to combine everything you should know already and to show you once again how the simplicity approach can change everything, okay, and make it as simple as possible. So let's dig in. So we already see a chart on the M5 in here. We don't know what it is. I think it's EU a couple of days ago. So what we already see if we are right here on the edge. The first thing, as always, we have to find out where liquidity is. And guess what? Boom. Insane equal highs of Asia, high in here the previous day. And we already see also something pretty interesting, as New York Trap took out Asia low in here and then just moves price down, and then we have a build up in here, induced to a low side. So that's our inducement. Here's obviously our completed cycle, and we want to trade away from that during Asia if you're an Asia trader. All right, but now as we are right here in price action, we want to see what's going on using our lovely simplicity approach. So the first thing we do, as always, build up. Where is the relevant build up we look for right now? And it's exactly here. We have an up channel, and of course we want to see in what direction this up channel gets induced. So we do nothing but waiting. So inducement to the low side. We already see, okay, this doesn't really fit on the build up anymore. So we know we're now in the inducement stage, but is this probably the inducement that leads to the high? Not so sure about that already, right? And of course also, what time are we in? We're still in Asia, right? So what's our next potential time window? Frankfurt Open or London Open, right? And again, what could be a very juicy play they might do if they induce the build up low, right? Give the fast and Francturious trade, maybe even off Asia midline into the inducement. With that in mind, we maybe know, okay, this, yes, we are in the inducement stage, but this is probably not the inducement done yet, right? So if you really want to trade risky, boom, we can trade into the inducement, but that's not the simplicity approach so far. That's just the advanced understanding of what's going on, right? But for the simplicity approach, we just have the build up and the inducement. If you're more advanced, obviously you can trade the short in here, trading into the inducement, right? But if you stick to the simplicity approach, that's not it, right? You have to wait for more confirmations, right? The next thing though is we want to mark up points of interest, right? And again, if you're in Asia range and looking for a fast and curious setup, best scenario is Asia midline scenarios, right? So you mark it up and we wait, and what a surprise, we getting tagged in. But for a simplicity approach, we still only in the build up inducement stage, right? We need some more confluences. For example, the next stage would be, of course, you should know what it is, and now you see it very clear what it is. So not only have we had a beautiful, beautiful build up to the upside, which gets induced to the short side, right? Inducing structure to the low, tapping into Asia midline supply and demand areas. You already see the timing, Frankfurt Open, right? Perfectly in the time in here, in the mitigation, right? But now, what is this in here? Right, very late, obviously. A better one would be like something in here, but we don't have that. So this is the only relevant what? Relevant break of structure. So now we're in stage 3 of the simplicity approach. So choose. So now things getting more and more interesting, and now you slowly but surely can prepare for something, because even there we never took out Asia high, but we had this inducement of the build up to the low side into mitigation, into timing, now relevant break of structure, right? So the next thing we want to do is what? Mitigation. So overall it would be this whole zone in here, M5, right? But if you want to go the extra mile, we go into the M1 and see, okay, extreme maybe, and the only last possible supply demand candle would be in here. So maybe we refine it here because again, this stop loss is much too big. So again, we can risk a way more smaller refined point of interest in here with the lost supply, or again, if you want, wait until the whole extreme. But again, if you studied fast and victorious trades, again, it's not really that likely to go all the way down in here and then go higher, right? So that may become something like this. So this is definitely a good POI to choose. Also lines up with the M5 mitigation perfectly, right? So we're changing this obviously to here to make it more refined and having a much better entry opportunity in terms of risk reward, right? So that's why we place it like this. So next thing though, in the line, we have the build up, inducement, relevant break of structure. And now we marked out our mitigation zone, or at least potential mitigation zone. The next thing on the simplicity approach is smart money trap. So as we talked about earlier a couple of times, you can use the smart money traps in your advantage also. That's how you should mark them out always, because what should do the smart money trap, or what should the smart money trap do, right? If it's a smart money trap and not a for fuck's sake, obviously you expect a what? A reaction. And now if you mark this obvious smart money trap out and expect a reaction, what could this do? Or what should this do, right? Obviously push price lower into our potential mitigation zones, right? And that's technically, again, if we put everything together and we just want to trade even Asia into everything we have so far, we would understand, okay, huge buildup, sideways buildup, induced high to go lower, inducing finally with vector candles. Here's your potential first buy trade for the day, right? The target is something like this, medium target, like not the maximum target, just medium targets in here, right? Then of course, build up, getting induced to the low side, right? But this is not done yet. So in proper understanding that we should go at least Asia midline, or at least some potential mitigation zone. In this case, we don't have no other option than Asia midline. Then we could have taken this short in here, right? Traded into the potential false break of structure into our point of interest. So we took this buy, we're taking this sell, we're taking this sell off, and then would be the extreme mitigation, extreme limit order for the potential Asia midline plays, right? Into obviously relevant break of structure in here, right? Oops, give me my thing back. I accidentally removed my pen. Be nice if it, there we go. Thank you. So then obviously, after this happens, relevant break of structure taps into the smart money trap with the understanding that the smart money trap should give a fake reaction, right? And obviously, best case, go lower in here. It would be very foolish if we hold this trade in here, if we know, okay, price should come back anyways in here, because then we technically out of break even anyways. So best if we take this trade in here, close it with this relevant break of structure in here, and then trade the reversal or a pullback in this case, right? And expect a direction out of the smart money trap. We technically can trade the smart money trap as well for potential reaction, right? But at this point, obviously, we still are in the overall simplicity approach, and we only at the smart money trap roster or point, right? So we just expect a false reaction. We can take this an advantage to take a potential short, but not from the simplicity approach, just by advanced understanding, right? Simplicity approach here continues, right? So obviously, next thing even on the simplicity approach is what is, I already marked it up here, right, is the timing. Okay, so London open could also, if this gives a false reaction, could definitely be a possibility in here. So it's not a fast moving tourist anymore, like because it was in here, the fast moving tourist one, and now obviously London open right around the corner. If the smart money trap gives a reaction, it definitely can tap into this point of interest. So let's see what happened, right? First of all, smart money trap only gave a minor reaction, so not exactly where we wanted to be. But guess what? Is it a problem? No, it is not, because even nicer, London Open comes in here, right? And then fakes or creates the double top, the triple tops in here, right? So if London Open obviously brings the liquidity right in here and fakes the reaction to push price lower, that's even sometimes 10 times nicer. And you literally should be like Wolf of Wall Street, Sean and Belfort in here, right? And obviously just right, because this is perfect. This is actually the perfect scenario. If you now have this equal highs in here, the smart money trap reaction, right? Obviously did not react too deep, obviously gave this point in here, and then finally false react from this double or triple top in here, which makes it even way nicer. So now you're in the build-up, inducement, relevant breakup structure, mitigation, smart money trap, timing, also pad is purpose. The only thing now you need is an entry helper, right? So you add the entry helper, double click the chart, and the entry helper appears, right? And you would already see, based on where the liquidity or equilibrium line is, you really can't have a let in here. The only thing you can have is this static let we talked about a lot, right? Again, this just replaces the let if you don't have a potential let opportunity. As in this case, obviously, price is all the time below technically the equilibrium line, so there's no potential let, right? So now, but perfectly gives the static let of the fixed equilibrium, right? And of course, that's when it taps into our M1 mitigation zone. So build up, check. Inducement, check. Relevant breakup structure, check. Mitigation, check. Smart money trap, check. False reaction of smart money trap, also check. Timing, here and here, still in perfect time window, check. Entry helper, check. Juicy. What's the last point missing? Of course, the limit order, which should have weighted down in here, right? So as we talked about the entries, minimum target is definitely, again, based on the M5, the next relevant breakup structure in here, right? Or also can be Asia range high, right? If it's, again, technically the minimum is down here, and this technically would be a little bit higher, but not the medium. The medium one would be this one in here, right? So again, if this is your minimum, you just can, in this scenario, include this this one risk as it. Again, if it takes out this one, again, it's almost damn near impossible to hold that and make like this. Okay, so minimum, medium one is the medium liquidity, right? And then what's the maximum? Obviously, this juicy Asia high from the previous day with the triple top in here. That's your maximum target you should aim for. And what is the price? Boom. Minimum. There we go. Minimum target hit almost instantly. Didn't waste too much time. 50 minutes, and the whole thing was in our minor target or minimum target. And then didn't wait too long also for the medium target. But at this point, you should be a little bit skeptical about the situation, as again, it's almost a little bit too good to be true. If your entry is right there, no drawdown at all, 0 pip drawdown, and then just smashes into your medium target instantly, takes out the medium liquidity, you should be like, oh shit, no pullbacks, no nothing, only vector candles. Taking out a medium target into what? What's in here? What have they still left in here? Imbalances. Oh, vector candle into mitigation. Oh, after taking out a medium target, what should you ask yourself? Medium inducement, vector candles into mitigation. Again, think about the picture we had earlier with Wolf of Wall Street, Jordan Belfort talking to whom, right? You know this guy, absolute legend. That is how they keep the wheel spinning over and over again to reduce traders. They have to keep the wheel spinning and obviously do exactly what they just did here. Speed, right? Obviously taking out the structural point in here, medium target is then taken, and into mitigation, right? They want to give obviously some sort of cycle completion, obviously at least these areas, and then to take out the overall targets in here. But this is the same scenario. This becomes the smart money trap overall, because again, we don't expect this to hold. If we have triple tops in here of previous days high and also Asia range high, that's not going to happen, right? But as we had, obviously this vector candles, medium inducement taken into mitigation, it's definitely good for a reaction to keep the wheel spinning and obviously bring people in the short side as well, right? So with that keeping in mind, we expect now the false reaction out of it, and technically you can trade it if you really wanted to, right? You want to trade the pullback, there you go. Also, you can see timing was magic manipulation minute 1, right? And now pullback, and this technically now gives the first let, but as we talked in here, we replaced the let with the first static let in here, right? And if you watch the overall M5 chart, right, coming out from this build down or build up, obviously to the downside, you can call it build down if you really want to, like build up in here, inducement to the low side, vector candles, right? Where's your let? Where's your first let? In here, right? Obviously pulls back, gives the let, not the nicest, but it is there, right? And then what's the only thing you look after? EDMs, boom, it's right here as well, right? So this is technically done. Now we just have a new build up inducement, right? So we can look for a new EDM or let and EDM cycle, right? The only thing we're missing is the let, which got replaced with the static let. So this let up here is on the fully wrong part of the chart anyways. Again, we only look for lets of the extreme mitigation of the inducement, which was this one, static let in here, and not this one, right? But still technically the first let of the M5, so it definitely can its own purpose of having what? Again, what do traders see? Break and retest, right? This is our let to obviously push price higher, exactly the same as the smart money traps to give the false reaction in our favor, obviously push price higher and maybe into mitigation of this medium inducement, give a false reaction again, faking again the lower lows to get people involved in the different direction, right? So let's see what they do, pushing price higher with the let and the false break and retest into now the mitigation of the medium inducement, right? So again, this cycle is not completed yet. They just induced it, moved away. There's no relevant break of structure, anything near on the M5, right? So again, they're faking the pullback into extreme mitigation, right? So technically you can trade it for a new pullback to make lower lows. So again, signalize people, oh shit, it's overall, look at this pullback, oh, new push, pullback, new lower low. Okay, maybe here, but now makes new lower lows, maybe. So again, they see still the overall downtrend overall, right? So what do they do? Of course, we just had this mitigation of the medium inducement, and boom, what a surprise. Obviously gives the reaction forming these lower lows now, right? Coming from this point, making a low, making a lower lows. Obviously people now think, okay, trend continues starting from here, obviously, right? Maybe just whatever, this and this pullback, okay, can happen, but now he's starting to make no lower lows again, right? It's all part of the whole keeping the wheel spinning thing, of course, but guess what? Based on this build up with the inducement, with the relevant break of structure, with the timing, with the smart money trap, with the another timing, with the entry helper confirmation. What's another entry helper confirmation? The only thing we look for anyways, in which is left. It's already there. It is the M5 EDM. right? So if we place the M5 EDM from here to here, obviously it's a huge zone, but just saying this is exactly what we look for, and we still have our juicy target to the high side left. And also if you check at the timing, obviously magic manipulation minutes 2 right around the corner. So this is way too big to take, right? But this is exactly what we look for in the M5 in terms of EDMs, right? After the LEDs, or technically the static LED in this sense, as it replaces the LED in here. The first LED was here, but completely wrong position. But that still pushed price into the extreme mitigation to fake the reaction one more time, forming our EDM on the M5. We can't take it as it's too big in terms of the point of interest. So guess what? What's the overall simplicity approach for this exact scenario right here? As again, we completed this one already. What's the new simplicity approach, right? We completed this full one with the entry already. Now we can start a new one. We have our build up. We have our inducement to the low side of the build up, right? We're coming from this inducement anyways, right? So the reaction also makes sense in terms of coming into this. And we overall want to trade away from this in here. We want to trade away into the medium inducement overall. We had like our technically medium inducement. Obviously, I want to see that from 10 miles away that this is our relevant medium inducement, right? And now we're heading our build-up inducement into even here build-ups in here, into inducement, into mitigation, forming our first static LED. Only thing left is the EDM, which we had right now. And obviously we want to take out these liquidity points in here. But now for this cycle, simplicity cycle, right, we just have the build-up and the inducement, right? There's no other stages. So we have to wait, right? For what? Relevant break of structure. So right, this thing now, this build-up into inducement, tapped into our mitigation point, right, into our point of interest. And it's also the EDM for the bigger picture, and we still have overall our targets left, right? And now we had this build-up, inducement, relevant break of structure. What's the next thing? Mitigation. So we're marking out our mitigation zone in here, right? Again, technically the wick is down here. Not sure if you see it properly, but obviously we don't want to place the stop loss all the way down here. So we're just taking this M5 supply demand candle in here, right? To make it a little bit more sense out of it, right? Then next thing in line, smart money trap. Same thing. If it taps in here and gives us our reaction into it, even nicer, right? We kind of expect it anyways, right? So smart money trap is locked in, and we can look at the next step, which is time. And we already marked it up earlier. Boom. Magic manipulation time window. Perfect. And we already see, oh, it already tapped into us now. Perfect. So technically, we are already in. After the relevant break of structure, next candle instantly tapped us in. Boom. Perfectly on time confirmation as well. There's only one thing left though, which is the entry helper. And we kind of had that already coming from this EDM, right? Which was still missing after this inducement. This was the static LED, technically real LED, and now we have the EDM in here. We want to aim higher, right? So now this technically is your M5 entry in here, but even then you can say maybe let's go in the M1, right? So this is the M1 in here, right? And okay, we're coming from obviously this point in here, right? So let's see, this is our M5 point of interest, not really that clean in the M1 at all. So let's see if the entry helper can make this more confirmed, as we don't really have any other points of interest in here, right? Let's take out our entry helper and boom. What's going on in here? Look, it tapped into, takes out the equal lows in here, right? First of all, we had this baby build up in here, vector candles tapping higher, obviously, to then complete this baby cycle. That's why you can take technically this also into it, right? Or technically, first of all, into it in here. Then, obviously, boom, goes lower, completes the cycle, build up, getting induced to the high side to go lower, takes out the equal lows into a mitigation, right? We had all these steps before, and now entry helper also was EDM on the M5, but now, what a surprise, perfect let on the M1. So this is definitely good for market execution. If you really want to play it safe, put the stop below here. If you want to stick to the M5 supply demand candle, you can place it here because you have an let entry here. Absolute perfect anyways, right? So entry can be in, boom, like this on the M5 anyways, and confirmed by the M1 let also, and it instantly pulled back. Absolute perfect. So entry is in, you should be like this at this stage, liquidity, right? Yes, I have build-ups, inducement, mitigations, or brick of structure, targets, everything is there, right? Perfect. The only thing, as you just said, is targets. Entry is placed, targets. Minimum target, we're choosing the passive minimum target in here, just in case, right? We just completely wrong and we just will never trade for the mitigation here. Then we have a medium target to obviously make a new high in here, and the maximum target should be pretty obvious, taking out the equal highs, triple top of Asia high and yesterday high. So perfect 3 targets in place. Nothing really can go wrong too much at this stage. Let's see how I played. Boom. Absolute perfection, right? And this is exactly what we talked about. If you choose, obviously, the maximum target right away, here's the triple tops, which was very obvious to get taken out. But what happened before, right? They just snacked. If you go back again, here was our medium target, right? So guess what? After they snacked the medium target, they decided to play the fake away one more time. And look at this crazy pullback of this fake reaction. Again, almost took us out of break even. Again, and it's not that crazy difference. It's maybe 2.5 or more, but obviously at this now you should definitely aim for the high. And again, it's just an example where they just decided to do what? Again, faking the equal highs like crazy and then doing this, which then is always a nail in the coffin for retailers, as they having the relevant, or in their point, the break of structure, right? And then obviously they're tapping all into this smart money, this very obvious smart money trap zone, right? And obviously they're all having the direction changed of this crazy resistance in here, which can never get broken in here, as you see. Crazy sharp reaction makes the structure break. This thing has to go to hell, right? Obviously not, but that's exactly what they do, faking the a break of structure one more time, right? And then finally pushing price and taking all the liquidity. And you can imagine how many people just got smoked in here, right? And vice versa, obviously, huge resistance level with even 5 points in here getting tagged, finally getting broken. What do the other retailers see? Insane resistance getting broken, huge breakout, all the breakout traders and their sisters jumping in this buy trade, right? Believe it or not, but that's literally what's going to happen there, right? And yeah, definitely that's unexpected. So we knew everything beforehand already. The only thing you should not dive into and not getting into danger of becoming this guy in here, be like, I know everything, right? And just stop here and then be like all ego driven. No, repeat, always remember, they have to keep the wheel spinning. It goes on and on and on and on. It goes on and on. The wheel keeps spinning and has to keep on spinning, right? So now we completed this full simplicity approach as well. And now we took out this massive liquidity with the 5 tops in here and with speed vector candles as well. The wheel has keep on spinning. So what do we have? Build up. Okay, we talked about it like 5 times already. With this huge build up in here, whereas the inducement should be very clear. Obviously, this one right here. So what are we waiting for? Obviously, relevant break of structure, but what do we already see? What we have also for our compass? timing, right? So we already have 3 steps from the simplicity approach. We have the build up, the inducement, and the time. So now we can switch from the M5 to the M1 because now we want to play New York Cup trades, right? So from the M5 to the M1 we go. This is the M1 right here, right? We had this obviously juicy inducement in here with this beautiful wick, right? And now we already see what relevant break of structure. So we have the build up, what we had earlier, right? Of the 5 tops, the inducement, relevant break of structures, lovely. Even this little build up in here with speed getting induced even one more time, and you can see how well they trying to induce everyone to the high side in here, right? So we're missing the mitigation, we're missing the smart money trap, we're missing entry helper, and we're missing obviously the entry. So let's see what we can check next. After the relevant break of structure, we can of course mark our mitigation zone, right? It's very big though, that's what she said, but anyways, it happens. And we can add the smart money traps in here as well, right? So we're obviously adding our simplicity approach into the whole game, and we continue the plays. So we had our build-ups, right, from the left. We had our inducement. We had our relevant break of structure. Let's make it like this. We have marked our mitigation zone, which now even got hit. We marked up our smart money traps in here. Again, technically would be nicer if this happens, but it did not. It is what it is. Timing, you can see it already. New York trap window. Entry helper is the next, and what a surprise. Look at this Mona Lisa in here. After all the steps we had, finally we also have our M1 let to give us the much better entry of this big mitigation zone. So again, if you don't want to put the limit in here because it's way too big, wait for exactly that. Boom, candle closes, gives you the let entry, market execution here with your entry helper or with the trade assistant. Stop goes above here, boom, and you're in, right? So entry is in, right? So simplicity approach completed with the market execution, right? So, and M5, back to the M5, we have everything checked: build up, inducement, relevant break structure, mitigation, smart point trap, timing, entry helper, and also entry. What is missing though? After proper risk management, of course, after proper execution, is the minimum and medium and maximum target. Minimum target, aggressive one, of course, the next relevant break of structure in here. Medium target, Asia midline, points in here. Maximum target, equal lows of Asia low in here. If that's in, you just sit back again. If you, whatever target you choose in this scenario, most likely as we took significant liquidity in here, it's obviously best to maybe even aim for the maximum target, then sit back and enjoy like this guy enjoys it. That's a live video of Cameron right here, how he enjoys his take profit, right? And instantly smashed the take profit, right? But as always, you should not sit back and enjoy too much. The wheel keeps on spinning. Remember, the wheel has to keep on spinning, right? So don't stop here. What else should or do you notice? What's going on? We have always this huge down run. We had this build up which got induced. Build up, inducement. What else maybe? Timing. Okay. You see our juicy indicator in here with London close timing. If London closes the extreme, it should induce something, which it did. So we already checked 3 points from the simplicity approach. Very interesting. So now we can do the same thing again. We dive into our London close time window into the M1, right? And let's see how it looks like. So from the M5 to the M1, and we see what? First of all, boom. We see our huge buildup getting induced to the high side to go lower. And it just keeps on channeling, right? Until what? Perfect time window to the absolute minute in London close. And then literally a few minutes after, what's going on in here? The first and only relevant break of structure. Isn't that interesting? After the build up, after getting induced to the high side, after this channeling downwards, after perfect timing is into place to the absolute minute, out of a sudden, the first relevant break of structure appears. So we can check the build up, the inducement, the relevant break structure, and the timing. Still a few points missing though, right? So mitigation, already happened after the relevant break of structure, so we can check that as well, right? So the only thing is though, no entry helper confirmation, right? So this is missed if you technically want to trade that. Again, we talked about that you can also have not fully completed simplicity approaches. This should be more than enough for you to maybe risk a trade, especially coming off this juicy trades in here. You should be having a much buffer for the day to risk the play, right? But even to check it even more and getting more confidence, we can still wait for argument's sake. But if you want, obviously, here's your juicy trading opportunity. So if you continue to play, obviously now it already moved out of it, right? And we can also, and I mean, you already see messed up the animation here, is what, right? So of course, the next thing we also missing is a smart money trap, right? And now we're seeing, okay, this build up in here is inducing to the low side. Okay, so maybe it wants to go higher into the smart money trap in here and then gives a reaction as well. So we can check also now the smart money trap in here because we have a good understanding of where price should go, right? So after the first relevant break of structure, after the build up, after the inducement with timing, right? Channeling upwards, inducing downwards, giving us our smart money trap potential in here, all in the London close time window, right? So if we continue, obviously, it looks so juicy in here to make it even more clearer what's going on here. Again, another build up, sideways build up, right? With the equal lows in here. Boom, getting induced to the high side. What a surprise, and taps into the smart money trap. That's why we should know it's a smart money trap and not for fuck's sake, as you have this build up, getting induced to the high side into mitigation, right? So that's good for a reaction, but that's it. The reaction, not the whole reversal or whatever, or continuation, because again, we expect the smart money trap coming off this huge build down, right? And obviously then moves away from the inducement of the London close as well, right? So this is good for smart money trap reaction though, as we had this build up induced to the high side, obviously good for reaction. If that's good for reaction, we should at least aim for next false break of structure, right? So let's see how it looks like in here. Interesting. So we got that. So we aimed, or we took the smart money reaction, or we saw it happening, aimed for the false break of structure, and we already can see what candles, vector candles in here, right? So let's see what's the next step. We just wait, right? Still not really any entry helper confirmation. If you think that's a let, that's not a let. The let should be all the way down in here, right? So if anything, we look for EDMs. We unfortunately didn't have anything, right? So that's completely fine. So now we're moving away from this false break of structure, build up, inducement into this mitigation areas, right? Perfect. But let's see as well what we have for our overall simplicity approach. We had our build-ups, right? We had our inducements, first of all to the low side, here to the high side, right? Our relevant break of structure, like in terms of we had it down here already, right? Technically, we basing the build-up, the simplicity approach still from the first one, right? So we had this build-up in here, inducement high, going lower, like inducement obviously now low side and London close, relevant break of structures, and these build-ups coming after, right? But they're not checked in here. We had this checked before, right? So then mitigation also checked in here, smart money trap checked in here, smart money reaction checked also, timing window, London close window also checked. Last thing now, entry helper confirmation, maybe of another cycle build up, right? Another one, finally we had this, or before that we had this false break of structure to a low side with vector candles, and they're still trying to trade away from this one. Overall, we have another sideways channel buildup. If we're getting an inducement low into this mitigation zone, forming also the let entry, that's another simplicity approach completed. And what a surprise, boom, it did exactly that. This buildup in here gets induced to a low side, right? Which also was that. It kind of funnily was let before, but obviously you don't want to take this let in the middle of the buildup in here, right? And if you do, then obviously you have to put your stop below this anyways. It's much better to wait, obviously, to get the inducement low and then to complete the cycle to the upside, obviously, induce low to go higher. And that's exactly what they did. Looks like even news, funnily enough, again, what a surprise that the news complete the cycle and the picture to 100% all the time. What a surprise. Oh yeah, there's news right in here, right? So if you did not take it, completely fine. But again, it just completes the picture so perfectly, right? So let's say we missed it for argument's sake though, because there's no entry in here anyways. If we would have taken it though, minimum target in here or in here, right? So this is technically the minimum target, or this one, depending on how much to the left you want to look, here or here. Medium target should be, again, some sort of passive ones in this scenario, some sort of mitigation areas. And for the maximum target, if you want to take it out for whatever reason, right, late at the day, again, for me personally, maximum, minimum in here, right, or not the maximum for me personally would be the minimum, if that makes sense, right? But technically your maximum is of course higher and nothing else, right? And if you go back to the M5 now, look at this beautiful thing just heading off. Again, kind of a little bit unexpected though, because this did not take out anything to the left too significantly, other than the Asia range in here with perfect time window, but then you just decided to smash everything to the high side once again. To sum it up though, we had this perfect simplicity approach completed, all stages included, fully done. We had this perfect full cycle, full simplicity stage and stages done. We had this fully maxed out simplicity approach done, and at this stage we also had this simplicity approach fully maxed out again, right? So 4 perfect completed simplicity cycles in just one day. Isn't that insane? Again, trade less but still trade the major trades of the day by using the fully maxed out simplicity approach. So even if you say this, for argument's sake, is too late and you didn't like it, these 3 should be 100% lining into those perfect completed simplicity approach cycles. And if you even saw, even the last one in here was fully maxed out as well. So I hope this opens your eyes once again of how simple it can be, and again, to not making shit up, to follow all the steps in order and just wait for what should be next on the list, and then combine it with the overall picture to find the sense out of it, and then complete the day with full clarity and making less shit up, taking huge quality trades. And as you just saw, we had 4 trading opportunities. They all have been fully confirmed in just one single day.